All right, so doing some legwork here for the 2023 account challenge before we start officially tomorrow. So what I have here is my watch list. Then I have it actually further filtered by no earnings in the next 45 days. Obviously, my intention is to hold for less than 45 days, so that means we should be good there if they don't have earnings. If they do have earnings, that could very easily throw everything off, even though it will have increased volatility, higher IV, so we should get a better credit. It's not worth the risk on a account this size. So then I kind of started here at the top, looking at the price, and I got down to, let me see here, uh, XHB, somewhere around here. So it was right under $60 until the collateral required to hold the position just became too much. So XHB is around $500. That's definitely feasible to do, but at that point I can only do one contract, which, is fine if the credit is there. A lot of times you can get a better overall credit if you're selling two contracts. So anyway, so somewhere in this range and above is kind of where the market is sitting. So then I go through each one, look at the chart, and if it's doesn't look too bad, like here, uh, it this kind of looks like a potential double bottom. So I could come over here to Tastyworks, which I have up on another screen, and that was clip CLF. Um, okay, so then I come out to 45 days expiration about. This is 46, which is obviously close enough. Then I scroll down and scroll back up, and then that usually fills these in. So I want to go around the 15 delta or less, so that would be the 11 delta here. And we can tell this is delta, and getting around $20. And then I look at the collateral required, and then I just make a note of that. So let me pause here for a second. Okay, so then I can make note of each one. And so that would be CLF. Oh, if I can type. Let's go ahead and do that so I can see better. The collateral needed was 230, which means I could do two contracts and still have around the 500 buying power affected, so that's cool. Come back here and look at the strikes. They're about every dollar wide. So you don't need to note that, but it's just a good thing. Also, if you wanted to note the number of expiration cycles, if it has weeklies, that's also a good thing to keep track of. Okay, so the delta here was 11. Yeah, 11, and then the credit was 20, right? Okay. So I went through and made a list here of all the tickers. Now, this is for today. Obviously, every single day is going to be different, but one day isn't going to make a huge difference. So just going through here, if I were to write two of these contracts, I could get a $40 credit and have a $500 buying power effect. Just going over these numbers, specifically looking at these two columns, it does look like shop is going to be probably the best bang for our buck. It has a fairly low delta. 67 is a pretty good credit, and then we only have 260. So I could write two of these contracts, get around 120 to $140 of overall credit, and I'm only at the 11 delta, um, so that's pretty, statistically speaking, pretty good odds. So let me pull up the chart here. Okay, so just looking at the options chain for shop, again, it's going to be the 46 days to expiration. So we could sell here either the 25 or the 26, and even up to the 27 before we go over the 15 delta. Obviously, the lower delta, the better the odds. And then once you get past this standard deviation here, the prices do tend to drop off because the likelihood goes back. It's just that much further away. So I don't necessarily hate the idea of coming to 26. And again, if we come over here, that would be 260. So I can do two contracts there, 72. Oh, what happened there? That's interesting. Let's go back to one. What kind of what kind of sense does that make? So maybe we could do something like that. Um, there. Okay. I'll have to refresh. I'm not sure if that's a bug here or okay, let's do this again. Oh, now there's a half contract there. Interesting. What is going on? You guys saw that, right? I'm not going crazy. Uh, okay. Let's reset. Okay, yeah. Now I'm way up there. Okay. 26 was what we were looking at. Okay, 261. And then, oh, did I roll out? I might have hit the wrong thing. Nope. All right. So yeah, so it looks like to do two contracts, you would do one there and one there, and then that would get you at the 512. So that looks like what we'll probably be doing. Let's go over to the chart here. One thing that is attractive to me about this is we're past earnings, and we've went down. We were chopping in this range forever. We went down, and then after a couple weeks came back up. And actually, right now we're over the 120 day or the 100 SMA. So let's change that to 100 to be a little bit more standard. So for the past two sessions, we've been over the 100 day. So those are all good things. Yeah, I could use the chart over here in Thinkorswim. Um, I just like the look of TradingView better. But yeah, there's nothing wrong with being over here. So I know I'm hopping in between every single system in the world. But yeah, for those not familiar, this is Thinkorswim. And then if we come over here, this is TradingView, and then this is Tastyworks. So yeah, so right now it looks like I'll be selling the 25, 26 puts. Both of them are sold. So not doing a put credit spread. That would be buying the 25. But anyway, so we'll look for a reduction around 512 and a credit for around 126. If we were to open that up right now, of course, things will change, I'm sure, between now and then. But just wanted to go and show my process and the legwork that's sort of involved before you get going. Yeah, I'm not just going to jump in and not be prepared. So I wanted to show you how I did that.